this video we look at the topic death cover for your family. The path that you and your family take cannot always be fully planned, and you cannot know which unforeseen things will happen when. To put it in a picture, if you and your partner are the draught horses of this family, it is bad if suddenly one of them falls away. Then the remaining partner has to manage everything alone, and that can be really hard. Then it would help if support in the form of an insurance payment appeared. The calculated risk of dying can be easily expressed in numbers and statistics. To cover this risk, you can put it in a classic life insurance with savings. But then, it isn't very flexible to handle and would be more expensive because of the long time it will cover your life. In many cases, the time you will need the protection is shorter than till age of retirement. A special instrument for this is the risk life insurance. It handles only this calculated risk, and you can customize it according to your specifications and make it an individual protection for you. So in this video, we talk about this instrument. In the life of a young couple, there are some stages that have to be managed with their income. For example, the credit to own a house, the first and perhaps the second child, a credit to buy a bigger or newer car, and after a longer time there are renovations to make. These things can usually be managed well with the incomes of both partners, but if one partner suddenly falls away, things will become difficult to impossible. And then the payout of a matching life insurance policy would be a great support. The first question to find out the right instrument for you is what sum is needed and how long the support will be necessary. For example, how old are your children and how long they will be dependent on support, or look at the duration of your credits. There are many things to take into the consideration here, so I recommend to consult your insurance advisor, maybe me. But how great is the danger of dying? If you look at the statistics, every year 50,000 people before the age of 55 in Germany are dying. And a big part of them die because of problems with the cardiovascular system. And what about with the help of the statutory pension insurance? If you look at the pension information that you get every year, you'll see the first amount called disability pension. This will be around 29% of your gross income. And the widow pension will be around 55% of this amount. So you can calculate with around 15% of your gross income, but you can only get it when you paid into the statutory pension insurance at least 5 years. At the end of this paper, they warn you that the statutory pension will be not enough, and you should do private insurances to cover your needs. Now we know that the expenses will be bigger than the income, so you will need extra money to handle this problem, and we know from the last years that there is not much return on secure assets in these times. So you cannot calculate with good returns. You will need the money how it comes. For example, if you need €1,000 monthly for the next 20 years, you should have €240,000 on your side. How can we get to the right sum insured? If we do a simple calculation, we take your net income and multiply it with the years that your family needs support. You can decrease this sum with the saved expenses, for example the second car or other costs they will have anymore. Add existing credits and subtract the half of your existing assets. Why only the half? Your assets belong to both of you, and it shouldn't be consumed only for the daily expenses. There should be a remaining sum for unforeseen little things. If you want to, you can put in a little safety reserve at the end. Here's an example for a time of 11 years and an income of €45,000. The costs will decrease with €20,000 a year because one partner falls away and with him a car, a pension plan, contributions and so on. For the house credit, there are €240,000 to pay. And from the existing assets of €80,000 we take 50%. At the end, we put in €50,000 as a reserve. So the sum I need would be around €500,000. So now you have the right sum insured for your protection. The contribution for this protection is higher how older you begin and how long its duration is. Naturally, the risk to die is higher when you're older. You can decrease the sum insured how you like it every year, and the contribution will decrease as well. But you also can do the contract with a falling sum insured. So you will pay less contributions from the beginning, because the risk automatically decreases over the time. One of the last points to think over is how to handle the profit participation that comes with nearly all kinds of life insurances. The amount of the profit participation is not guaranteed, but it will be there every year and will have an effect. You can put it on the side of the sum insured, so you can decrease the guaranteed sum a little bit, and you decrease your contribution as well. But here small fluctuations could make a big difference in the amount, so I wouldn't prefer this. You can either put it on the side of a contribution, so the sum insured always is fully guaranteed, and the contribution can move a little bit. In my eyes, this is the better choice. There are partner policies. How do they work? Both partners are protected with the sum insured, and if one partner dies, there will come the payment, but only once. If both partners would die at the same time, then the sum will pay just once too. And this could be a bad thing if there are kids and both parents vanished suddenly. So for families, it should be a better idea to do the protection for both partners and separate policies. So every partner has his own separate protection. And in the better situation, there will be the full payment for both of them. For the calculation of the contribution, these are the most important facts. The sum you want to insure, how long the protection should last, what work you do, and how healthy you are at the moment. And you will see, in the most calculations, the contribution is surprisingly low. If you have the matching protection, the journey of your family will go on, even if one day you may no longer come with them. If you would like your individual calculation, I'm looking forward to your message via email, WhatsApp or direct call. You can find my contact information under this video. Thank you very much and best regards.